The broadcast is now starting. All attendees are in listen-only mode.
All right. Good evening, everyone. Okay, welcome to today's webinar over here. Okay, so today's session will be sharing with you I would call it even an indicator. I would call it the COT report. It stands for Commitment of Traders Report. I'll be sharing with you, okay, what this is in a very easy way to understand. Okay, and of course show you some of the tools that is freely available online, and how we actually use the COT report to help us to do some analysis. Okay, now if today you are looking at short-term trading, right? When I mean short-term here, I'm referring to more like intraday or even scalping, where your trades are perhaps at best maybe within the day or at best 2 days. Right, and the time frame that if you're looking at executing trade is maybe like 30 minutes, 15 minutes time frame. Okay, then the COT report might not be very effective for you. Okay, however, if today you're more of like swing trader, okay, where you look at time frame maybe on 1 hour time frame, 4 hour time frame, or even daily time frame, and you're looking at taking positions, perhaps having the duration of maybe across like 2-3 days or even up to 1 week, then having this toolkit here and understanding how to look at COT might provide you an additional information other than your typical fundamental analysis, your typical technical analysis. Okay, so this is an additional way to look at the market. Okay, and this is what we call COT report. Okay, so if you head over to Google, right, and you just do a simple Google search of COT report, just want to share with you, information right now is readily available online. Okay, so I'm not gonna go into details where things I believe you can just Google it off, right? So I think few of the website over here, if you do a COT report search on Google, the first one is actually the official website by CFTC. This is where you actually can get all the comprehensive data with regards to COT. Okay, if you scroll down a little bit, okay, Investopedia had some articles that really talks about what commitment of trader is. If you like to kind of build up your own database, your own spreadsheet, okay, babypips.com, if you just continue to scroll bottom right, you can see how to find COT report, and then within that, they also cover how to actually construct your own spreadsheet. Okay, so all this will not be covering today, but what I'll do is I'll give you an introduction to that, okay, and then I'll share with you some of the indicators that TradingView already have it, so that it's easy and it's quick enough for you to use it directly on TradingView. Okay, so first up over here, what is COT report? Okay, so I think it's important that you need to know, when you're trading FX market, for example. Okay, most of the time we are trading the spot market, or some traders would call it the CFD market as well. Okay, so this one here is slightly different from what we call the futures market. Okay, so you need to first understand that when we look at COT report, look at the data from there, we are essentially looking at the futures market. Okay, so the difference between futures market and of course spot FX is that futures market, that technically there's some differences. Okay, but in terms of like price movement, it's not huge. Okay, but of course in the futures market we don't say like euro dollar, pound yen, euro yen, etc. Okay, in the futures market you basically either trade the euro futures, you trade the yen futures, you trade the Canadian futures, pound futures, etc. Okay, and of course, the dominant currency in the futures market is of course USD. Okay, so of course, if you look at like euro futures and you compare it to the price chart of like euro dollar, the price movement is going to be more or less the same. okay, is again that technicality difference there is. Okay, so you need to first, of course, understand that when you look at COT, okay, you're looking at the data based on the futures market. Okay, and what is going to be included in the COT report? Okay, essentially there will be 3 categories of traders, okay, that is being recorded inside. Okay, so these 3 categories, the first one here we call it the commercial traders, okay, which is typically we will put it as like businesses or business owners dealing with, let's say, international trade, or dealing with, let's say, commodities, okay, and they would like to hedge their business, okay, because of, let's say, for example, oil prices tends to fluctuate quite a bit, okay, and if you are dealing in the oil and gas industry, and you don't hedge your position against the oil price, then your business P&L will basically fluctuate a lot according to the market volatility, right? So they need to have a certain hedge to protect their business P&L. Okay, and that's the part where this group of traders enter into the futures market mainly to hedge their position. Okay, now the second category, we call it the non-commercial. Okay, some website will put it as large speculators. Okay, and as the name suggests, right, large speculators, they're actually in the futures market to really make money. Okay, so you can think of this category of traders, right, as perhaps your hedge funds, right, your fund houses. Not you and I, right, we are considered like retail, so we are smaller, but these are basically organizations that really deal with futures market, and they're in there to make money, right? Their main objective is profit. Okay, so you can see it as the opposite of commercial, right? Commercial is not there to make money; they are there to hedge. Okay, but non-commercial, large speculators, they are there to actually profit from the market. Okay, and the third category over here is called the non-reportable. Okay, and as the name suggests, this category is not important because it's very, very small. Okay, so for us as retail traders, if today we want to go and understand what's happening in the COT perspective, we always focus our attention to the non-commercial or large speculators. Okay, so that's the first thing I think you need to know when you look into COT. You need to know which category of data that you want to pay a little bit more attention. And for us, it's going to be non-commercial and the large speculators category. Okay, now within the COT report, okay, there are of course some data that you can actually extract. But for us, okay, as retail traders, when we are going in, we want to understand what are these large speculators doing. We basically want to know, okay, the long positions reported in the futures market. Okay, we want to know the short positions reported in the futures market as well. Okay, so long position is basically telling us how many current positions in the futures market are on the buy side, okay, which means how many buy positions are currently open. And if you look at short positions, you are definitely looking at how many positions in the futures market right now is on the sell side. Okay, so this immediately kind of give you the perspective of, okay, is there more interest in buying or is there more interest in selling? Okay, so this is where we look at long and short positions, right? And if you start to combine these two, long versus short, okay, we're able to get what we call the net positions as well, okay, which is essentially just taking your long and your short and then you put them up together. Okay, if your net position is positive, it means that there are more long positions compared to short. Okay, so your net is positive number. If let's say today your net position is in negative, which means you have more short position compared to long position. Right. So one way to very quickly look at is there more traders buying or more traders selling is to just look at the net, and if the net is positive and the net is increasing, then what we know is that there are more traders who are interested in buying up the particular asset. Okay, vice versa, if the net is negative and is falling, that means it's getting more and more negative, then we know there are more interest shorting the market. Okay, now the other data that we're going to be interested in is called the open interest. Okay, in short, usually COT we call it OI, stands for open interest. As the name suggests, right, there are the very technical way of defining what open interest is, but in a very layman way of understanding it, right? You can see it as is there interest in that particular asset? Okay, so give you a very simple example. Okay, if the OI is increasing, it means that more traders are actually opening up new positions and getting involved in the market. Okay, if the OI is falling, it tells us that traders are exiting and closing off their position. Okay, which means that maybe they're shifting their interest and shifting their focus to another market. Okay, so as the name suggests, right, open interest, you can just see it as a very layman way of understand. Are there increasing interest in this market, or are the large speculators looking somewhere else, right, where the interest actually starts to drop? Okay, so this is one. And the other one that we look at is called the COT Index. Okay, so what is an index? Okay, index essentially is just doing some kind of comparison. Okay, and one of the common comparison I would say that we use, okay, it's a 3 years comparison of high and low. Okay. So to understand index, right, it's like if you look at the technical indicator, it's similar to the concept of what we call relative strength index, your RSI indicator, right? More or less similar logic, okay, where we're looking at for the past 3 years, what is the maximum net position and what is the minimum most negative net position, and then that will mark our highest and lowest point. Okay, so in an index, within the 3 years data, the highest data would be your 100%, okay, and the lowest, the smallest, most negative data will become the 0%, okay. And what we do is we take the current net position and then put it into the benchmark of comparing the highest and the lowest for the past 3 years, and put it in a percentage term where we are in relation to the highest and lowest. Okay, so for example, if right now the current latest net position is the highest among the past 3 years data, then the COT index will reflect 100. Okay, 100, because that's the highest among the 3 years, right? So vice versa, if let's say today the net position reported today is in the middle compared to the past 3 years highest and lowest, then of course the COT index will be reported at 50. Okay, so what we do with COT index is we want to look at, you know, where we are right now in relation to the past 3 years highest point and the lowest point. Okay, and we are looking at extreme, which means that if the COT index is like above 80, so somewhere between 80 to 100, it tells us that, okay, we are near an extreme zone, so the similar concept of like overbought or oversold, okay, and we want to be looking out for potential reversal signal, okay, so that's how we use this index, okay. All this information you can actually find out and construct your own spreadsheet, okay, but for today, of course, I'll kind of show you how can utilize TradingView indicator, okay, to pull out all this information so you don't need to go and construct your own spreadsheet. Okay, of course, there are limitations to TradingView indicator because you can't really do much kind of play around with it, okay, because it's fixed. But if you actually construct your own spreadsheet, you can actually play around with it, like creating graph, do more in-depth analysis and things like that. Okay, but as a start, right, for someone who is just getting the hang of what COT report really is, I think TradingView indicators is more than sufficient. Okay, so this is what you really need to know. Okay, and then I'll go into the practical side of things to directly share with you today's context, and then we look at it and analyze it based on all this understanding. Okay, now this is just I would say a general knowledge, okay, because you know, if you're talking about COT, I think this is important for you to know as a general knowledge as well. Okay, so the data is going to be updated every Friday. Okay, of course, there will be some days, some Fridays that is kind of like holiday in the US, and therefore the data will be postponed. Okay, but typically it's going to be updated every Friday. Okay, and one thing you need to also know is that the data that is updated on Friday is only up to Tuesday. Okay, so for example, okay, let's say last Friday COT, which is the most recent that we can get already, right, is actually reported the data reported on Friday is only up to last Tuesday. Okay, so if you think about it, there's actually like Wednesday and Thursday and Friday. There are 3 days of data that is not reported yet. Okay, so some traders will kind of say that, oh, but then doesn't it become like a lagging indicator? Now you can see it that way, but for me, again, as I mentioned, if today you're looking at swing trade, the data is still relevant to you, right? 3 days of information, yes, there's some missing, but it's not going to make or break your trading analysis, okay? Because you're looking at longer term. So if today you're looking at intraday, as I mentioned, or even scalping, then COT might not be very relevant to you, okay? So this is kind of like a quick summary, okay, or kind of crash course towards what COT report is, okay? So with that, I'll bring you to the indicators that are already loaded first, and then I'll share with you how you can actually get this here, right, in an easy way. Okay. Now, this charts here you can see, okay, let me just very quickly bring your attention, guide you how to read these. Okay, at the top over here, this is basically the price, right, of whatever instrument you'll be looking. Right now is dollar franc. Okay, so the price of dollar franc is at the top over here. Okay, the second one here is the long position, short position, and the net position. Okay, so the white line that you see over here, this is your net position, right? Green is long, red is short. Okay, I think fairly straightforward, yeah? Okay, so while we are on this, you can see that for dollar franc, okay, so if I zoom in a little bit, you can see that we're net here, we are below zero, right? We're in the negative territory, which means right now we have more traders selling the franc compared to buying the franc. Okay, so that's what the information suggests, right? And of course, you can also start to analyze from here. You can see the net position is starting to tilt upwards, okay, which suggests that, okay, maybe right now, there are less seller, okay, and maybe starting to get more buyers, right? So that is what this data here can tell you, okay. The other one, this column here is the index. Okay, so you can see I've already marked up the red line here is 90% and the green line here is 10%. Okay, and we are looking at extreme. Okay, so when the index kind of like, you can see over here, this zone, it's above the 90. Okay, we are potentially looking for a reversal soon. Okay, and you can see, if you add in a little bit of price action, it was during this period where the dollar franc kind of like fall. Okay, and then of course, if we are at the bottom, okay, that's where we're starting to look for the reversal back up, right? So that's how we use the index. Now, if let's say the index like now, today, it's kind of like in the middle, then it's more like neutral, okay? So then we're not looking for reversal sign yet, okay? The last one at the bottom here, this is the OI, open interest. Okay, so if you're looking at this here, you can see open interest has been falling recently. Okay, what it tells us is that there's not much interest in the franc. Okay, essentially that's what's telling us. Okay, so some traders will use the open interest and kind of combine it and complement it with price action. So if the prices is going up and open interest is also increasing, okay, and net position is also increasing, then what is telling us is that there are more buyers coming into the market, there are more interest coming into the market, then of course the uptrend can be sustainable, right? Because people are continuing interested to buy into it. Okay. So that's how you can use the open interest, right? So if the market is going higher, but the open interest is not really supportive of that, right? There's not much interest yet, but the prices are just going up, then maybe that uptrend can be short-lived. Okay, it might reverse soon, or it might not be very sustainable in the upside. Okay, so that's how we can look out for it. Okay, so now if you look at it, what I usually do, okay, is I will look into the index. Okay, and you can see over here, right? If I click the gear setting on the index indicator there are the override product. Okay, which means that you probably need to key in like which futures you want to look out for. Okay, and how do I pull out this information? Okay, I actually can go over to the bottom tab over here, which is COT Index, and then there's this little icon called source code. Okay, if I click into it, oops, sorry, wrong one. Okay, this one here, index source code, okay, you can see on trading view, it will tell me, you know, which currency I want and what is the code. Okay, so you realize that we are looking at Swiss franc, right? So Swiss franc over here is over here. Can you see dollar Swiss franc? Okay, and therefore the ticker kind of symbol, the code is SF. Okay, so if let's say today I want to look at dollar CAD, then the code here is CD. Okay, and then all I need to do is go over to the index, the gear icon here, and then I'll change this override to CD. And I click OK. It will tell me, okay, the index, COT index of Canadian. Okay, if I want to look at, let's say, Euro, which is over here, ticker symbol is EC. Okay, then over here I'll change to EC. Okay, so that's how we're looking at it. Okay, now for me, I tend to look at COT report by looking at the index first to quickly gauge is if there are any currency futures that is at the extreme zone. Okay, so for example, you know, we look at dollar CAD, there isn't dollar franc, there isn't. We can look at the yen, which is JY. Okay, followed by Aussie, which is AD, right? We can look at them very quickly. JY over here, which is Japan. Okay, so you can see here Japan. Okay, is at the extreme, right? So immediately what I want to do is I want to look out for Japan right now. Okay, so all of this I'll change to JY to kind of analyze Japan a little bit more because COT index is at the extreme, right? So I want to understand what's happening on the Japanese yen futures. Okay, of course, over here I can go over to Japanese yen. Okay, so from the index, we can see that it's at the bottom, which means that we're in the extreme. There's a potential of a reversal. Okay, and extreme at the bottom means that it's oversold. Okay, so means if let's say this is going to reverse, there will be more buyers coming into JPY. Okay, so of course you need to put that into the FX pair, right? Because if you're buying yen, then if you're looking at dollar yen, then dollar yen will likely come down, vice versa, and things like that. Okay, so in terms of COT index, you can see over here, this is the extreme. Okay, and then if I start to look out for the net position, we can see we're in a negative territory. So there are more sellers on the yen for now. Okay, but I also can look into the detail. You can see the sellers here has been falling. Okay, the sell position has been falling a little bit. Buying has been still flat. Okay, open interest has been picking up a little bit. Okay, so overall, you know, this kind of suggests that, okay, you might want to start paying a little bit more attention to yen, right, JPY, okay, and you might want to start to look out for potential buy reversal for the yen. Okay, so if you take a look, right, you can see here we have been in the extreme overbought condition for the yen in the past. Okay, and what happened? The yen weakens, right, because usually it's a reversal. So the yen weakens, and you can look at price action here. Okay, the yen weakens, so dollar yen shoots up. Okay, so you can see how nicely the indicator kind of tells you a potential reversal is coming, at least for the long run. Right, so COT is not short term, right, because it's a week to week data. Okay, so same thing over here. If right now COT is telling us at the extreme where the yen is being oversold, okay, you want to be starting to look out for a potential big reversal for the yen. It might come, okay, where the yen might start to strengthen. And if the yen strengthen, of course, just now I mentioned dollar yen probably can come down, euro yen can come down, etc. Okay, so this is on the yen side, right? So let's jump to Australia and take a look if we have anything to note. Right, so Australia, you can see, right, recently it has been in the extreme and starting to bounce up, right? So let's change everything over here to Australia right now. Okay, and take a look at Australia. Cool. Okay, so you can see as of now, index has been reversing. Okay, the net position has been from very negative, starting to turn a little bit higher. But one thing to concern is to look at the OI. You can see OI is dropping. Okay, so what it's suggesting here is that maybe we want to at least see OI pick up a little bit first. Okay, and then we might then start to look out for maybe more buying pressure from the Aussie, at least for the longer run. Okay, And what we want to also see, of course, the sell position here starts to drop, the buy position starts to increase, net position continue to increase, then combine it with perhaps the price action confirmation. Okay, this can be a very huge potential trend mover. Okay, so Australia dollar, something you can look out for, right? So today we have looked at like Japan and Australia. I think these two currency you might want to pay a little bit more attention, at least for the long run. Okay, the other one here we can see is pound, which is BP. Okay, so let's take a look at the pound. Okay, BP. Not much, but it has been from an extreme coming down. Right now it's already at the neutral. Okay, another one is New Zealand, which is NE. Yeah, New Zealand is at the extreme, right? So let's take a look at that. Okay, good. Let's go to New Zealand. Okay, so what we see here is New Zealand is at the extreme overbought, which means potentially a reversal soon. OI is still falling, right? We want to start to see this pick up. We want to see the net position starts to reverse back down as well. Okay, now if that happened, then we might get a bigger move in the Kiwi to the downside. Okay, so in terms of COT, okay, of course you don't want to just use COT as your your trigger to get involved in it. It's not a very it's not a very effective way of timing your entry. You still need to complement it with maybe a little bit of the technical portion, right? But COT can give us that early sign of information where you want to start paying a little bit more attention. For example, okay, today we look at Australia is at the extreme for COT index. We look at Japanese yen, which is also at the extreme. Okay, and of course, over here we have the New Zealand, right? So these three currencies, the index is already printing at the extreme. Okay, so this suggests that you want to maybe start paying a little bit more attention to it, because when it starts to reverse, okay, the trend can be rather big. Okay, so this is how you can utilize trading view indicator over here to kind of assist you, right? You do not need any kind of like data compilation and things like that. You probably just need to be very familiar with how to use all this indicator. Okay, now how to actually pull out this indicator over here. Okay, if you have trading view, you can go over to trading view, search for my profile, okay, my name over here, okay, and then go over to the bottom under my ideas that I've published. You just search COT, okay, and then you'll be able to find over here I have this COT template. Okay, you just give it a click, okay, and you'll be able to see this little icon at the bottom called share. If you click this, you can see you can make a copy and make it mine. Okay, once you click this, it will duplicate the entire set of indicators over here, okay, to your trading view charts, right? And from there, you'll be able to directly use them already. Okay, I do use this for very quick reference, like what we just did just now. Okay, however, if you would like to go into more in-depth analysis of COT data, you eventually will still need to create your own spreadsheet. Okay, and of course, there are many ways you can do it. If you need a quick guide on how to construct your COT spreadsheet, okay, you can go over to babypips.com. Okay, under how to find, they do have all this here to guide you as well, right? So again, as I mentioned, things like this that is already available online. I don't think I want to spend too much time to go through again with you, but I'd rather focus, our time here to share with you more on like things that you can't easily find online, and the practical aspect of how to use it, right? I think that's a little bit more valuable since you decide to kind of like, commit some time to watch this. Okay, so I hope this sharing session over here gives you a different perspective into what are some of the tools you can actually use to help you analyze the market. Okay, COT has its strength, okay, and the benefits of it, of course, is more of like identifying a potential trend change that's coming, okay, because COT is long term. and you'll be able to catch on like huge trends looking at COT. The downside of COT, I would say, is the timing, right? Because you still need to have certain knowledge in the technical analysis portion to help you pull the trigger, like when to get in, where to set your stops, and etc. Okay, because COT can't really tell you like exactly when to get it. Okay, so yeah, I hope today's sharing session over here helps. Okay, by providing you guys kind of like a different perspective into analyzing the market. Okay, on top of just your technical analysis portion. Good. Okay, so I hope it helps. If you enjoy something like that, we do run sessions like this on Mondays, right? So every Monday I try to kind of like give you a little bit on different perspective regards to the market, right? Sometimes we talk about strategy, sometimes we talk about analysis method like today. Sometimes we talk about indicators. Okay, so yep, that's all from me for today. Hope you guys enjoy it and benefited from it. Okay, so with that, that's all I have, and we'll see you guys real soon again.